Good morning, it's Trisha, and I wanted to go over the trades for yesterday, Tuesday, June 23rd. Everybody was asking me if I would do a video because we took a lot of trades based on a range trade setup. And those of you who have the ebook should have gotten a revision probably like a month ago. It just was titled, I think, Squeeze Revision and Range Trade Setup. So it's a little over a month ago, so you should have that. And those of you who bought the ebook like in the last few weeks have the revised ebook, so you guys should all have it. So if you're interested in the setups that we use, you can go to www.easyemintrade.com. So yesterday was nice because we were going sideways, but we were going sideways with a wide range. And what I mean by that is once we establish a trading range, for example, okay, here's our support. Basically, we draw a resistance and support area once the market starts moving. Here's our open. So here's where we start out in the morning. We come up to this area. We come back down to this area, and we're testing the same areas over here. So we can draw a support line there. Then when we are bouncing off support, we're expecting hopefully to get back up to this area here. So when our indicators are in line down here starting to curl back up and we're at support in a sideways range, I can't stress that enough, this is in a sideways range, then we go ahead and we place our order basically I always use a quarter above the bar that's basically setting up when our MACD crosses over. So also we see we have price moving down while our indicator is moving higher, so that's divergence leading us to believe that we're going to go higher. So we thought we would take a shot on that, even though we had the existing home sales number coming out at 10. We were watching this and watching this and watching this, well before we got in at 9:48, and it just took that long to materialize. So we thought we would just give it a shot, knowing that 10 o'clock was coming and that we were going to be out by then, or at least almost out by then, at least by 5 to 10. So we took it expecting to get up to here, got in at 891, and you would have got your +1, +2, and realistically, as you started off the resistance area here, as you started turning against you, then you would have flattened and canceled your remaining third of your contracts. So 10 o'clock comes and goes. This is after 10 o'clock. This is 10:07. So we get up to this resistance area. And that resistance area above our head is this yellow line that's showing on our longer tick chart. And it's right about here. And if you look to your left from the day before, which was Monday, it was a pretty strong resistance area. We couldn't get through here. We tried a couple times to get through here, couldn't bust through. Pre-market yesterday morning, couldn't get through. Yesterday morning, couldn't get through. So we felt pretty confident in taking that short. So that's right where we're at here. So we wait for confirmation on our two indicators. We go short at 892 and got our +1, +2, and then actually got 3.5 on our final third. So that worked out well. The difference why this was working out so well yesterday, because we had a wide enough trading range. Lately, we've only had, like, if we go sideways, we're dealing with just either a really sloppy range that we can't repeat, like meaning it's not holding the same area of resistance or support, so it becomes difficult to have an idea of where it might go to next. But when you have a wide enough range to trade, it becomes easier to do, meaning that you have enough room to wait for everything to get in line and then still have enough room below you or above you to take a nice profit. So this one we got a little added bonus. We were only expecting to get down to here, and we actually got down to the close from Monday and exceeded that. And so when you see it going against you, then you can exit your trade. I actually exited before we even got to the low here, so you actually could have done better than the 3.5 on that final third, but I exited right at the close from the previous day. I didn't really expect it to go lower, so but many of you didn't. You waited till you saw it turning against you, so good for you. So we figured, okay, we're at this support area here. We've got this resistance area here or here. So we took a long here when it set up at support and expected it to get back up into that area at least, but it didn't. So what we did was we actually got in that at 889.25 and then got our +1 and then basically flattened and canceled at my entry point. So 2/3 were break even, 1/3 had a profit of +1. So the next trade that set up, we actually waited till we got below. This is the close for Monday, this is the low for Monday, and then the dotted line is a midpoint on our floor pivots. So we had a squeeze setting up, squeeze short at 1042, and to the downside, obviously short. So we took that at 886 and it started to turn against us. So basically I flattened and canceled at a half a point loss. Some people actually got a small gain depending on where they got filled at. I didn't get filled where I wanted to, but so that one was a small loss for half a point. But we expected it to actually get down to about the 883 area. That's where I had the support line drawn from based on looking at the daily chart, and actually I was a little bit off. 884 was actually more in line with the daily chart, and unfortunately I still had it at the 883 area when this squeeze fired off, and that was at 1106. So got in at 885 to go short, and basically wasn't really going anywhere. The support area is right below us. Like I said, I thought I had till 883, so I actually moved this up during this trade, and I flattened and canceled at my entry point. So that was a break-even trade for me. Had I had this line drawn here where it should have been and not at 883, I would have passed on this trade, knowing that in my mind I would be thinking that we wouldn't get very close, that we would be bouncing in that area, and that's exactly what happened. So that's why it's important to know what area is below you where you could get a price stall or a bounce, and what's above you where you could get a price stall or a pullback. And this was a trade at 2:30, so we established a range again. So we've got a resistance area here, support, comes down to the close and the low from Monday, comes back up to that resistance area. You can see it's testing the same area as here. So when we hit that again and we start lower and we get confirmation on our two indicators, we go short, expecting to get at least to our close from the previous day where we've tested here previously. So we go short, and that was actually at 2:30. Got in at 891.25, and I got +1, +1.25, because we had a support area right about here that I put my second profit target right above, which worked out to be +1.25, and then I was willing to hold on to that last third to see if we actually broke through here, but we didn't. So then you flatten and cancel when you see it going against you. So that worked out well. So anyway, those are the trades that we took on Tuesday, June 23rd, and you guys do have that range set up, so check it out. You just have to make sure that you have a wide enough range to trade, and it's exactly what it says. It's a range play, so it's not for days where you have a trend in one direction or the other. Okay, have a great day, and we'll talk to you later.